Losing a spouse, your life partner, is perhaps one of the most profoundly disorienting experiences anyone can go through. It's a time when the ground beneath your feet feels unsteady, when the familiar landscape of your daily life shifts in ways you couldn't have fully anticipated. Your heart aches, your mind races, and amidst the fog of grief, there's often a sudden, pressing weight, managing the finances, now entirely on your own. Perhaps you shared these responsibilities. Perhaps your beloved partner handled most of it. Or perhaps you were the one primarily in charge. Regardless of the previous arrangement, stepping into this new reality, where you are the sole decision-maker for your financial present and future, can feel incredibly daunting. It's like being handed a complex set of controls for a machine you've never operated solo before, all while navigating a deep emotional storm. You might find yourself staring at piles of mail, notices, bills, and statements, feeling completely overwhelmed. Where do you even begin? What needs attention right now? What can wait? Who do you need to contact? The questions can seem endless, swirling around in your head, adding a layer of anxiety to the sorrow you're already carrying. It's perfectly normal to feel lost, confused, perhaps even a little frightened by the sheer volume of it all. You might worry about making mistakes, about missing something crucial, about whether you'll have enough to live comfortably, about honoring your spouse's wishes or the plans you made together. These are valid concerns, shared by so many who walk this path. The silence where financial discussions once happened can feel deafening, replaced by the burden of solitary responsibility. Please know, first and foremost, that you are not alone in feeling this way. This transition is monumental, and it's okay to feel unsteady. It's okay to admit you don't have all the answers right now. Grief itself takes tremendous energy, making complex tasks like financial management feel even more challenging. Your mind might feel foggy, your concentration might waver, and your usual decision-making clarity might seem elusive. This isn't a sign of weakness. It's a natural part of processing a significant loss. Trying to tackle everything at once can lead to burnout and mistakes. The key is to approach it gently, methodically, and with a great deal of self-compassion. Think of it not as conquering a mountain in one leap, but as finding a clear, manageable path forward, one step at a time. That's really what we want to explore together here. We want to provide something akin to a guiding hand, a structured way to approach the financial tasks that inevitably arise after a spouse passes away. Think of it as a checklist, but not a cold, impersonal list. Instead, picture it as a supportive framework, designed to help you navigate these turbulent waters with a bit more clarity and confidence. It's about breaking down what feels like an insurmountable challenge into smaller, more manageable pieces. It's about giving you a sense of control in an area of life where things might currently feel very out of control. This isn't about rushing the grieving process, far from it. It's about gently organizing the practical necessities so that you have more space to heal, without the constant nagging worry of financial uncertainty looming over you. Over the course of our discussion, we'll walk through the essential steps. We'll start by looking at the immediate priorities, those time-sensitive tasks that often need attention in the first few weeks and months. This includes things like securing necessary documents, understanding immediate cash flow needs, and making essential notifications. Then we'll move into the crucial phase of organizing, gathering all the relevant financial information, understanding the assets and liabilities you now manage, and getting a clear picture of your new financial landscape. This involves delving into accounts, benefits, insurance policies, and estate matters. Finally, we'll touch upon looking ahead, beginning to think about your long-term financial security, adjusting your budget and plans to reflect your new circumstances, and considering how you want to shape your financial future. The goal isn't to become a financial wizard overnight. The goal is to empower you with knowledge and a clear process. It's about transforming that feeling of being overwhelmed into a feeling of capability. It's about ensuring you have the information you need to make sound decisions for yourself, protecting your well-being and honoring the life you shared with your partner by securing your future. This journey requires patience, courage, and kindness towards yourself. Taking these steps, even small ones, can be incredibly empowering. It's a way of affirming your resilience, your strength, and your ability to navigate this new chapter, ensuring your financial stability while you cherish the memories of your loved one. Let's begin this process together, gently and thoughtfully, focusing on bringing order and peace of mind to your financial world during this difficult time. All right, let's gently turn our attention to the practical steps, the building blocks of regaining your financial footing. Remember, this isn't a race. It's about methodical progress, giving yourself grace along the way. We'll break this down into manageable areas, focusing on what needs doing and why it's important for your peace of mind and security. First, let's talk about those immediate, often time-sensitive tasks. In the initial weeks and months following your loss, while your heart is heavy, there are certain practical matters that usually require prompt attention. Think of these as securing the foundation before you start building. The most crucial item is often obtaining official copies of the death certificate. You'll likely need quite a few, typically 10 to 20 copies. It sounds like a lot, but nearly every institution you deal with, from banks to insurance companies to government agencies, will require one. Having them ready prevents delays down the line. The funeral home director can usually help you order these, or you can typically obtain them from the Vital Records Office in the county or state where your spouse passed away. Keep these certificates in a safe, accessible place. Alongside this, gather other vital documents you can easily locate: your spouse's social security number, your marriage certificate, birth certificates, yours and your spouse's, military discharge papers if applicable, and any existing wills or trust documents. Having these together early on streamlines many subsequent processes. Hand in hand with documents comes notification. Key institutions need to be informed of your spouse's passing. This isn't just protocol. It often triggers important processes like benefit claims or changes to account status. High on the list is the Social Security Administration. If your spouse was receiving benefits, Social Security needs to know promptly to stop payments. Importantly, you should also inquire about potential survivor benefits for yourself. We'll delve deeper into benefits shortly, but making that initial contact is key. Don't rely on the funeral home to do this. Make the call yourself or visit a local office to ensure it's handled correctly and to start the survivor benefit application if applicable. Similarly, contact any former employers or unions regarding potential pension benefits or life insurance policies connected to work. If your spouse was a veteran, reach out to the Department of Veterans Affairs, VA, regarding possible benefits. You'll also need to notify financial institutions, banks, credit unions, brokerage firms where you hold joint accounts or where your spouse had individual accounts. Their procedures vary, but they often need a death certificate to update account titles or release funds. Life insurance companies holding policies on your spouse also need prompt notification to begin the claims process. This might feel like a painful round of phone calls and letters, and it is. Allow yourself breaks. Ask a trusted friend or family member to sit with you while you make calls if it helps. But getting these initial notifications done prevents complications later. Imagine the frustration of discovering months later that automatic pension payments were still going out, and now need to be repaid, or that a life insurance claim was delayed simply because the company wasn't informed. Taking these steps early, though difficult, clears the path. Second, once the most immediate tasks are underway, the next crucial step is to gain a comprehensive understanding of your financial landscape, your assets and liabilities. This means taking inventory, creating a clear picture of everything you now own and owe. It might feel like detective work, especially if your spouse handled most of the finances. Start by gathering all relevant statements for bank accounts, checking, savings, CDs, investment accounts, brokerage, mutual funds, and retirement accounts, IRAs, 401ks, 403bs. Note how each account is titled. Is it a joint account, meaning you likely have immediate access and ownership? Or was it an individual account in your spouse's name? Individual accounts often become part of the estate and may require legal processes, like probate, to access, unless there's a designated beneficiary or a payable on death, POD, or transfer on death, TOD designation. Understanding these distinctions is critical for knowing what funds are accessible now versus later. Look closely at beneficiary designations on retirement accounts and life insurance policies. These designations typically override instructions in a will, meaning the funds pass directly to the named person. It's vital to confirm you are the beneficiary, or to understand who is if it's someone else, like children from a previous marriage, perhaps. Sometimes, people forget to update these after major life events. I recall one woman, Mary, who discovered her husband had never updated the beneficiary on a significant work retirement plan after they married. It was still designated to his sibling from decades prior. While legally sound, it wasn't his intention and caused considerable heartache and financial strain for Mary. This highlights why verifying beneficiaries is so important. Beyond financial accounts, consider physical assets. Locate the deed to your home and any other properties you own. Understand how the property is titled, e.g., joint tenants with right of survivorship, tenants in common, as this affects ownership transfer. Gather information on vehicles, titles, loans, valuable personal property, art, jewelry, appraisals might be needed for estate purposes, and any businesses your spouse may have owned. Simultaneously, you need a clear picture of liabilities, what is owed. Compile information on mortgages, home equity lines of credit, car loans, student loans. Sometimes these are forgiven upon death, but not always. Credit card debts, and any other outstanding loans. Pay close attention to joint debts versus individual debts. Generally, you are responsible for repaying joint debts. Debts solely in your spouse's name are typically paid from their estate, but laws vary by state, especially in community property states, so clarity here is essential. Uncovering a hidden debt can be alarming, but knowing about it allows you to plan accordingly. One gentleman, David, whose wife had managed their day-to-day bills, was surprised to find a significant balance on a store credit card he didn't even know she had. While unsettling, identifying it allowed him to contact the creditor, understand the terms, and incorporate it into his revised budget rather than face unexpected collections calls later. Creating this comprehensive inventory, a personal balance sheet, is perhaps the most empowering step you can take. It replaces uncertainty with facts, giving you a solid base for all future financial decisions. Third, let's focus specifically on your income sources and potential benefits. Your income streams may change significantly after the loss of your spouse. It's crucial to identify all existing and potential sources. As mentioned, Social Security survivor benefits are a major one for many. Eligibility depends on factors like your age, your spouse's work history, and whether you have dependent children. Generally, you can start receiving survivor benefits as early as age 60 or 50 if disabled. But the benefit amount increases if you wait until your full retirement age. There's also a small, one-time lump sum death payment from Social Security, $255, usually paid to the surviving spouse. It's important to discuss your specific situation with the Social Security Administration, as the rules can be complex, especially if you also qualify for your own retirement benefits. They can help you understand your options and potentially maximize your lifetime benefits. For instance, you might be able to take survivor benefits first and delay taking your own retirement benefit, allowing it to grow larger. Beyond Social Security, investigate potential pension survivor benefits. If your spouse earned a traditional pension, the plan documents will specify if survivor benefits are available and how to claim them. Contact the pension plan administrator directly. Don't assume the former employer will automatically handle everything. Life insurance proceeds are another key income source for many widows and widowers. Once you've notified the insurance company and submitted the claim form and death certificate, the payout process begins. You often have choices in how you receive the funds: lump sum, installments, kept with the insurer to earn interest. Consider seeking advice on the best option for your needs before deciding. Also, review the assets you inventoried earlier. Some might provide income. Rental properties generate rent. Certain investments pay dividends or interest. Understanding these ongoing income streams helps you build your new budget. It's about piecing together the full picture of what money is coming in now that your household income structure has changed. Consider Sarah, who initially panicked after her husband, the primary earner, passed away. By methodically working through this step, she realized that between Social Security survivor benefits, a small pension survivor benefit she hadn't known about, and the payout from a modest life insurance policy, her financial situation was much more stable than she'd feared. It didn't erase her grief, but it significantly reduced her anxiety. Fourth, it's absolutely essential to review and update your own estate planning documents. Your spouse's passing is a major life event that dramatically changes your circumstances, and your existing plans likely need revision. Locate your own will, trust documents, if any, financial power of attorney, and healthcare power of attorney, or advance directive/living will. Read through them carefully. Your previous will might have named your spouse as the primary beneficiary and executor. Now, you need to decide who will inherit your assets and who you want to manage your estate upon your passing. You'll need to name alternate beneficiaries and a new executor. Similarly, your powers of attorney likely named your spouse as your primary agent, the person authorized to make financial or healthcare decisions for you if you become unable to do so. You must designate new agents and successor agents whom you trust implicitly. This is crucial for ensuring your wishes are followed and that someone you choose can step in if needed. Also, critically review the beneficiary designations on all your accounts and policies. Your IRAs, 401ks, life insurance policies, and potentially bank accounts with POD TOD designations. If your spouse was listed as the primary beneficiary, you need to update these immediately to reflect your current wishes, naming new primary and contingent beneficiaries. Failing to update beneficiaries can lead to unintended consequences, potentially sending assets through the probate process or to someone you no longer intend. Imagine if, tragically, something happened to you shortly after your spouse, and your retirement funds went into your estate instead of directly to your children or another chosen heir, simply because you hadn't updated the form. Taking the time now to align your will, powers of attorney, and beneficiary designations with your new reality is a profound act of responsibility and care for yourself and those you may leave behind. It ensures your intentions are clear and legally documented. Think of it as putting your own affairs in order, providing clarity and potentially avoiding future complications for your loved ones. Finally, let's talk about managing day-to-day expenses and creating a new budget. This is where the reality of your changed financial situation often hits home. Your income may be lower, but many household expenses might remain the same initially. Mortgage/rent, property taxes, utilities. It's essential to get a realistic handle on your current spending and create a budget that reflects your new income level. Start by tracking your expenses for a month or two. Use a notebook, a simple spreadsheet, or a budgeting app, whatever works for you. Gather bank statements and credit card bills to see where the money is actually going. Be honest with yourself. Once you have a clear picture of your outflow and you know your new income from the previous step, you can create a budget. List all income sources and then list all expenses, categorizing them: housing, food, transportation, healthcare, insurance, personal spending, debt payments, etc. Compare the totals. If expenses exceed income, you'll need to identify areas where you can reduce spending. This can be emotionally difficult. Perhaps it means cutting back on dining out, travel, or certain subscriptions you once shared. It might involve considering downsizing your home eventually, though that's a major decision not to be rushed. Conversely, you might find, as Sarah did, that your financial situation is stable, but budgeting still provides valuable control and peace of mind. It helps you plan for future goals, whether that's travel, helping grandchildren, or simply ensuring long-term security. A budget isn't about restriction. It's about conscious choices. It empowers you to direct your money purposefully. Consider George, who felt adrift after his wife, who managed their social calendar and associated spending, passed. Tracking his expenses and creating a simple budget helped him feel more grounded. He realized he was spending quite a bit on convenience meals because he wasn't used to cooking for one. Budgeting helped him see this pattern and make a conscious choice to learn a few simple recipes, saving money and giving him a new, positive focus. This process of aligning your spending with your new reality is ongoing. Your needs and priorities may shift as you move through grief and adjust to life on your own. Regularly reviewing and tweaking your budget keeps it a relevant and useful tool for managing your finances confidently. It's a way of actively shaping your financial present and future. Taking these steps, addressing immediate tasks, inventorying assets and liabilities, understanding income and benefits, updating essential plans, and budgeting, forms the core of navigating the financial changes after losing a spouse. It's a significant undertaking, requiring patience and persistence. But each step you complete builds a stronger foundation, reduces uncertainty, and allows you more space to focus on healing. We've journeyed together through some very practical and sometimes emotionally heavy territory. Taking on the financial reins after losing your beloved spouse is undeniably one of the most challenging adjustments you'll face. It demands attention at a time when your energy is depleted, when your focus is clouded by grief. Please allow yourself a moment to acknowledge the courage it takes even to think about these matters, let alone act on them. What we've discussed isn't just a list of tasks, it's a pathway toward regaining a sense of stability and control during a profoundly unstable time. It's about building a secure platform from which you can navigate the future, honoring the life you shared while ensuring your own well-being. Let's gently revisit the key stepping stones we explored in the main part of our conversation. Remember, understanding these steps provides the map you need. First, we talked about those crucial immediate actions. Obtaining multiple copies of the death certificate might seem like a mundane administrative task, but it's the key that unlocks so many doors. initiating claims, transferring accounts, settling affairs. Making those difficult notifications to organizations like the Social Security Administration, past employers, pension administrators, financial institutions, and insurance companies is equally vital. It sets necessary processes in motion, prevents potential complications like incorrect payments, and begins the flow of benefits you may be entitled to. Gathering those initial essential documents, the will, social security numbers, marriage certificate, creates a ready toolkit for the steps that follow. Completing these early tasks, though perhaps done through tears or with a heavy heart, clears away immediate hurdles and allows you to breathe just a little bit easier, knowing the essential groundwork is laid. It's like clearing the debris after a storm before you can assess the damage and begin repairs. Then, we moved into the significant undertaking of creating a comprehensive financial inventory. This involves methodically gathering information on all assets, bank accounts, investments, retirement funds, real estate, vehicles, valuables, and understanding how they are titled and who the beneficiaries are. This step is utterly crucial because it transforms vague worries into concrete knowledge. Knowing whether an account is joint or individual, whether you are the designated beneficiary on a retirement plan or insurance policy determines your access and ownership. Simultaneously, identifying all liabilities, mortgages, loans, credit card debts, and understanding whether they were joint or individual provides a complete picture of your financial obligations. This inventory isn't just about numbers on a page. It's about clarity. It's about replacing the fear of the unknown with the power of knowing exactly where you stand. It forms the factual basis for every financial decision you'll make moving forward, serving as your personal financial map. Like turning on the lights in a dark room, it allows you to see everything clearly, the good and the challenging, and to navigate accordingly. Next, we focused on understanding your new income reality and potential benefits. Losing a spouse often means a significant shift in household income. Identifying all current and potential sources becomes paramount. This means actively investigating Social Security survivor benefits, understanding your options and eligibility based on your age and work history, and potentially maximizing what you receive. It means contacting pension administrators to inquire about survivor options from your spouse's former employment. It involves navigating the life insurance claim process and deciding how best to receive and utilize those funds. It also includes recognizing any income generated from assets you now manage, like rental income or investment dividends. Piecing together this new income puzzle is essential for knowing what resources you have available to meet your ongoing needs. This knowledge directly counters the anxiety that often arises around financial survival after losing a primary earner, providing a realistic assessment of your resources. Following that, we emphasized the critical importance of reviewing and updating your own estate plan. This is a step often overlooked in the midst of grief, but it's profoundly important for your future and the future of those you care about. Your spouse's passing fundamentally changes the structure of your previous plans. Your will needs updating to reflect new beneficiaries and a new executor. Your financial and healthcare powers of attorney need new agents designated, trusted individuals who can act on your behalf if you're unable. And perhaps most urgently, the beneficiary designations on all of your own accounts, retirement funds, insurance policies, potentially bank accounts, must be reviewed and updated. Ensuring these documents align with your current wishes prevents unintended consequences and ensures your intentions are legally clear. This isn't just paperwork. It's an act of taking control, of protecting yourself, and of providing clarity for your loved ones down the road. It's about ensuring your legacy, large or small, is handled precisely as you intend. Finally, we addressed the practical necessity of managing daily expenses and creating a new budget. With changes in income and the shift to managing a household alone, understanding where your money goes is key. Tracking expenses honestly, even for a short period, provides invaluable insight. Using that information alongside your confirmed income allows you to create a realistic budget, a plan for your money. This budget becomes your tool for making conscious spending choices, ensuring your expenses align with your resources, and planning for future goals or needs. It might involve making adjustments, identifying areas to cut back, or perhaps confirming that you have sufficient resources, which brings its own peace of mind. Remember, a budget isn't about restriction, it's about empowerment. It puts you in the driver's seat of your day-to-day finances, allowing you to navigate with intention rather than simply reacting. It's a practical way to affirm your ability to manage your life effectively on your own terms. Taking these steps is undoubtedly a journey, one intertwined with the complex emotions of grief and adjustment. It requires patience, resilience, and a great deal of self-compassion. Please, never hesitate to seek help when you need it. This might mean leaning on trusted family members or friends for emotional support or practical assistance, like organizing paperwork or sitting with you during difficult phone calls. It might also mean seeking professional guidance. Consulting with a financial advisor who understands the unique needs of widows and widowers can provide invaluable perspective on managing insurance proceeds, investments, and long-term planning. An accountant can assist with tax implications, which often change after a spouse's death. An estate planning attorney is essential for updating your legal documents correctly. Reaching out for professional help isn't a sign of weakness, it's a sign of strength and wisdom, ensuring you have the best possible advice tailored to your specific situation. As you move through this process, remember that managing your finances is not separate from your emotional healing. In many ways, it's part of it. Bringing order to your financial life can reduce a significant source of anxiety, freeing up emotional energy to navigate your grief. It's a tangible way of demonstrating to yourself that you can manage, that you can adapt, that you are capable even in the face of profound loss. Each small step, locating a document, making a phone call, understanding an account statement, updating a beneficiary, is a victory. It's a testament to your resilience. This transition marks a profound shift, moving from a shared financial life to a solitary one. It requires you to perhaps learn new skills, take on new responsibilities, and make decisions you never had to make alone before. But within this challenge lies an opportunity to reaffirm your independence, to shape your future according to your own needs and wishes, and to build a secure foundation for the years ahead. You are navigating uncharted waters, but you are not without a compass. The steps we've discussed provide direction. Trust in your ability to learn, to adapt, and to make sound decisions for yourself. Be patient with the process. Celebrate small successes, and always, always be kind to yourself. You are honoring your spouse's memory, not only by cherishing the past, but also by bravely and thoughtfully building your future. The path forward won't always be easy, but taking charge of your financial well-being is one of the most empowering actions you can take right now. It provides a sense of security that allows you the space to heal, to remember, and eventually, to find new joys and purpose. You possess an inner strength forged through life's experiences that will guide you through this. Trust that strength. Step by step, you can navigate this financial transition and establish a future that is secure, stable, and entirely your own.